Hey guys, hope you are all having a great day today. This week, we are coming back strong. We have so much to talk about, as it seems there is a lot of things happening in the background. We are going to be keeping it simple and basic, like my wife's boyfriend. We are going to be discussing a pretty big discovery that shines some light into the real prices of GameStop and AMC at dark pools. Now, remember that some of this stuff comes directly from one website, so thought the source is vouched for. Keep your mind open to updates in the future. However, that does not take away from the credibility that I have grown around the subject. This discovery was crucial for many reasons, and was partly to blame for the delay of today's big DD drop. I have been doing my own research and I will be talking some serious smack and making pretty hefty claims that, though I will not say they are proven 100% as I have no real insight into dark pool or hedge fund data, I will say is the most sensical and rational explanation. So, today's video will be going over the big Reddit post that illuminates light into dark pool price trading, and then use some of the evidence that was raised there to give some validity to my own research and big DD drop. We are back on the grind, boys. I know last week's videos, especially coming from Wednesday through Friday, were suboptimal, but I am back up and strong again. We going all out full swinging on these clowns at Wall Street, full Tokyo drift, baby. So strap on your seatbelts, put your sunglasses on, drink your milk and eat your bananas, cuz we going deeper than the Mariana Trench today. However, before we get started, it is super important for me to disclose that I am not a financial advisor, and that all we are going to be discussing today are theories brought up by me and other fellow researchers who have provided invaluable help in figuring out the schemes at Wall Street. All opinions here are my own, as I am the ones discussing them with you guys, since I believe them to be well researched, evidenced, and most importantly, true. I want to thank all my Patreons and one-time donors, who literally carry this channel on their shoulders. YouTube pays me like I do Nike labor because they don't like bots on their platform, and the fact that some of you make it so that you can support me means a lot. With that said, I hope you are ready, cuz we have a lot to discuss today, so let's get started. As I was writing today's video, an important set of news came out from Barron's. The insider scoop reports that the Swiss National Bank has scooped up AMC stock. Now, we have seen companies and institutions buying AMC and GameStop in droves the past couple of days. However, the Swiss National Bank didn't just buy just a couple extra AMC shares. They instead more than quadrupled their stake on it. We know the bank has a total of over 1.1 trillion assets, though they always decline to comment on individual positions of its assets. We do know that the bank bought 637,100 additional AMC shares in the second quarter to increase its investment in the movie theater chain to bring them all up to a total of 832,741 shares. This is a massive move by an institution. However, it is not alone in the recent addition of shares. I took a look through some Fintel and Market Beat data and came across some absolute fire news. In regards to AMC, the inflow of institutional ownership for the stock is already skyrocketing. Companies like Renaissance Technologies LLC have increased their ownership on the stock by 251% by this past Friday. Fintel shows a huge growth in ownership for the stock. Though you will encounter some companies placing puts or selling their small positions, nothing compares to the absolute massive bullish volume AMC is experiencing. Funny enough, a lot of these companies were also noted to have increased their GameStop positions. It does appear indeed that there is a realization across institutions that GameStop and AMC do have a future, will make great comebacks, and most importantly, provide a safe haven and great hedge against poor market conditions. With inflation, housing, employment, pandemic, infrastructure, social security, and many other problems rising in the past couple months, many are starting to get concerned about overall market health, especially when stocks appear to be moving up when the economy in general seems to be stagnant at best or tanking at worst. This divergence causes a lot of inquietude, and I am happy to see many institutions are coming to terms with what we have been preaching for so long on this channel, which is that AMC and GameStop are driven by other factors that separate them from a lot of the forces in the market. This difference makes them stand out and safe. They simply do not react and will not react like other stocks on a market crash. I keep hearing, through this is unconfirmed though, that everyone in Wall Street knows what's happening. They know what is going on and that the clock is already ticking. Another thing is the media. Remember when I told you that they spread FUD so they can buy along with their friends? This is what I mean. Do not listen to what any of them say, look at what they do. It is clear to me that if millions of dollars are coming from institutional investors every week, then there is something deeper going on than what the media would like us to believe. The first DD drop I want to discuss comes from a recently published post on Reddit by a user named TheDude0007. This absolute mad lad brought about some serious claims which, to be honest, all seem very likely and possible, at least from what I know and where I stand in knowledge of all the things that are happening. He began his post showing a screenshot of GameStop Level 2 data. Here, a very weird bid order came from MEMX, which is an independently owned technology-driven stock exchange. The order stood out in that the bid was $1.10, when all other orders are not below $150. Now, a quick look into MEMX will show you that the company has some very features that make it very beneficial for institutional investors like hedge funds and banks. Some of the ones that we should take note of are the ones regarding transactional fees. On the fee disclosure, MEMX shows that they indeed provide and charge a small amount to route shares to other markets. I do not know if you are a new person to this channel or not, but this should already have the hair in your arms pointy. Rerouting orders is exactly one of the most important strategies that hedge funds have used and mastered in order to keep driving the prices for AMC and GameStop down. Quick recap for those a bit newer to the stock. As my close colleagues pointed out to me, one of our leading theories is that they route huge chunks of buy orders into dark pools where they place them into different price cubes. These cubes, let's say, will have AMC shares bought at any price in between 30.01 and 30.05. All shares are placed in the so-called cubes, which then they process. However, when processing them, the value that comes from thousands of shares bought at that price comes as one, because it was one cube, or one batch of order, which takes away a ton of the bullish pressure that took place. It is one of the leading theories as to why even when a huge catalyst happens that should drive the stock up, we often find the stocks not really experiencing a lot of bullish performance. Wired brought this up to me and I keep finding clues that point to it being true. This is why it is so important for them to get as many buy orders into dark pools, because there they can manipulate huge orders and defeat a lot of the pressure they would otherwise bring to the stock price. So, going back to MEMX, we see that one of the transactional services they provide is routing shares into other markets, while removing liquidity. Now, you might be wondering exactly who is involved with MEMX, right? Well, take a look and be disappointed. We have Citadel Securities, Bank of America, BlackRock, pretty much all the biggest brokers out there. Virtu Financial, which is another market maker that doesn't get nearly as much heat as Citadel, but they should because they are almost just as involved in all of this. We have Wells Fargo, Morgan Stanley, TD Ameritrade, Citibank, JP Morgan and a ton of others. Why is everyone using MEMX, this weird stock exchange? Well, for the very obvious reason I just pointed out in regards to fees. Funny enough, Barron's posted an article back in 2019 where they explained why Wall Street wanted to build their own stock exchange. All these companies were founders of this stock exchange, and partial owners of it as well. The founders claimed that they wanted to feature lower costs, greater transparency, and simplified order types, which is the biggest crock of you-know-what. Why does MEMX exists? In brief words, this stock exchange was made for one singular purpose and one purpose alone. This is to undo and be able to operate outside of all the regulations that lit exchanges are forced to follow. This could perhaps give clue as to why the SEC has been so quiet about this. Maybe their jurisdictional power does not encompass for MEMX. Maybe in many ways they simply cannot touch them because it is outside of their own hands. We know market makers in particular don't benefit from having to deal with a lot of the strains and regulations imposed in lit exchanges, so they came up with a bright idea. They grouped together and decided to make an exchange that would allow them to front-run market trades, which we have talked about a lot in the past on this channel. Again, the existence of this exchange in my opinion is simply to not have to follow the rules and regulations that are enforced, or barely enforced, in lit markets. The last interesting piece of information on the Reddit post came from Pyth Network. This system trades in real time using blockchain encryptions. It has been trading GameStop at prices of $5,000 this past week. Due to this being a bit of a separate entity, its information provides a lot of value in the sense that the prices here seem to be more genuine and in line with all that is happening. What the theory behind hedge funds and other institutions buying at these prices is that they are only bought when volatility for GameStop and AMC increase. When we start seeing the stocks blowing up, institutions start buying at these prices and they start quickly rerouting these orders to MEMX until they gain control over these surges and then are able to dip them, which would explain all those weird vertical dips we see. Someone is paying big money at specific times of a day to suppress the price of GameStop and AMC from blowing out of control. They buy them for thousands of dollars in dark pools and then bid them for $1.10 as we saw. We have always speculated about the price, the real price that is, of GameStop and AMC in dark pools. We seem to have found a tool that gives us an approximate estimate of what they are currently being traded at. The second piece of DD is actually connected to what we have been talking about. The deal that happened with the discovery of put options in Brazilian shell companies has long stuck in my mind, and I have been working diligently to make sense of it. We know they are passing on the liability from their own sheets to others so that upon investigation or audit, nothing rings the emergency bell and they can keep things going for as long as possible. However, we don't know how exactly they have been able to pass on such liabilities, at least until now. I have been looking into cash settlements and contract novations in particular. A cash settlement is a settlement method used in certain futures and option contracts where the seller of the financial instrument does not deliver actual physical underlying assets but instead transfer the associated cash position. When looking into this, I came across way too many problems and evidence that prove this answer to be a bit problematic. However, looking into the problem a bit further made me realize that the key is on novations. Novation is the replacement of one of the parties in an agreement. To novate is essentially to replace an old obligation with a new one. I think hedge funds have been using novation to pass around the short liabilities through brokers. That's right. I think they have found another glitch by which they are able to replace agreements and pass them on to shell companies using brokers themselves. You see, as I said, holding on to all short positions represents a significant risk that can put them in jeopardy. As such, they need to find others to play the hot potato game, where they consistently pass the potato around. They realized that after the events of 2020 they could make incalculable amounts of money shorting companies to death, companies that they deemed too affected and had no long-term future. So, hedge funds started shorting to death companies at overexposure, not accounting for the internet and their will to buy and hold. Hedge fund and friends started renegotiating their deals with prime brokers to novate positions and contracts in OTC options, which we talked back a while ago. The way this would work, according to some of the data I have come across, is that by having put options as synthetic short positions. They sell these options at the strike price, consisting of on-exchange puts held by the shorts that are paired with the OTC call options written by the same shorts. The broker, the prime broker that is, would then come to rebalance books. If the broker ever needs to end a deal in the chance of being put in danger of too much risk, they can simply exercise call contracts, but this would essentially cause a surge and if too big, then a squeeze. As such, what this demonstrates is that hedge funds never closed any positions. They are simply using prime brokers to write off balanced books by a new glitch in the system to delay the inevitable by passing on the risk to other shell companies. In short words, they are novating, or in smoother words, they are renegotiating deals with prime brokers, converting equity-level short positions into mixed over-the-counter options which are then allowed to be traded and sent over to other shell companies. They get equity shorts into OTC options which they can then mask and send over to shell companies, which then makes the prime broker have a clean book and nothing comes across as uncanny. I am not saying brokers are deliberately doing anything wrong, but they are willfully being blind to let this happen because they know they too are on the hook when the thing comes to an end. I look forward to keep on adding to this theory of mine as days continue to pass, so this will not be the last time you hear about this. I hope this was clear to you guys. We have another week ahead of us and I hope these two sets of DD were able to provide you with good information as to what to expect moving forward. I want to thank you so much for your patience and support. Let me quickly dive deep into scenarios I think are most likely to happen in regards to stock price performance and I will let you off to enjoy the rest of your weekends. AMC had been moving up since Wednesday, in an ascending triangle that it will break on Monday. The stock has a resistance at 34. If it breaks it, I see it being tested at 35 since it was another pivotal resistance point. We had a lot of sell in the past at this price and I expect AMC to be heavily tested there. If it breaks past that, then a run to 38 seems most likely. However, eyes are to be on 34, as if it fails to go over this, we could see it hitting 29 again this week and possibly breaking under it. GameStop is similar. It is currently in an ascending triangle. Monday it will break out of it for sure. It has brought a lot of pressure being so long in it, so the breakout could be around $8 to $10 in difference. 164 is a big resistance and contentious point. If GameStop breaks resistance, it will for sure run to 167. It will be interesting to observe if we can maintain that high. If not, and we don't break 164, GME will retest 158. Depending on the severity of the dip, if we break that, we can expect more support at 154, which so far has proven to be pivotal to where we currently are. Thank you all so much for being and sticking with me to the end of the video. If you are still here, you are an absolute legend. Thank you all so much for the support, and I hope to see you tomorrow too. Hope for the best, expect the worst and hold to the moon.